of its Pennsylvania data centers.
Here's our roadmap now for you for the rest of the hour. Elon Musk walking back some of his sharpest criticisms of President Trump as Tesla stock makes a recovery from last week's drop. Details ahead.
Plus, Meta scales up its AI ambitions. It's investing $14.3 to get a 49% stake in Alexander Wang's Scale AI. We're going to talk about where this move could position Meta and, of course, that growing race for AI dominance.
And an out-of-this-world IPO, space company Voyager Technologies makes its debut here at the NYSE. CEO Dylan Taylor is going to join us live after the break as Squawk on the Street continues.
Garden centers.
Some breaking news on Disney and NBC Universal. Let's get to Julia Borston. Hey, Julia.
Hey, Carl. Disney and NBC Universal, which is CNBC's parent company, are filing a joint suit against AI company Midjourney, alleging copyright infringement and demanding a jury trial. The complaint, which was filed just now, includes images that Midjourney generated with characters including Lucasfilm's Darth Vader and from Universal Illumination's Minions. Disney and NBCU saying they asked Midjourney to stop infringing on their copyrighted works and that Midjourney ignored their requests. Now, this is the most high-profile legal action we've seen an entertainment company take to protect its IP. Disney saying, quote, "Our world-class IP is built on decades of financial investment, creativity, and innovation, investments only made possible by the incentives embodied in copyright law that give creators the exclusive right to profit from their works," saying we are bullish on the promise of AI technology and optimistic about how it can be used responsibly as a tool to further human creativity. But piracy is piracy, and the fact that it's done by an AI company does not make it any less infringing. So we're going to have to see how Midjourney responds. We're reaching out to them now. But this suit could set a key precedent for AI companies and entertainment companies going forward. Back over to you, Carl.
Julie, appreciate that. Adds one more wrinkle to the AI debate. That's our Julia Borston. Meantime, Voyager Technologies, a defense and aerospace contractor making its public debut here at the New York Stock Exchange. Company provides space-to-earth and space-to-space services for civil, commercial, and government missions. Our Morgan Brennan joins us this morning with the CEO, Dylan Taylor. Morning, Morgan.
Good morning, Carl. And yes, that's right. I'm here at Post 5 with Dylan Taylor of Voyager Technologies. This is a big moment, not just for Voyager, but also for space and defense tech overall. Upsized offering, oversubscribed, priced higher than the expected range here. You and I have talked about this goal for years now.
We have.
Of going public in a traditional IPO, which is not something we typically see with space companies.
Right.
Why now?
The timing is good. That was feedback from the investors, and I think our order book reflected that in the process. But also, I think thematically, some things have come together. Obviously, space infrastructure is a priority as we look to replace the International Space Station, for example. And then on the national security and defense side of things, whether it's Golden Dome or other security protocols that we're putting in place as a nation, we play right at the center of that. And so I think right company at the right time in the right place.
How big is the opportunity for Golden Dome for Voyager?
We don't know exactly, right? The president's budget request is circa 125 billion, I think. We will play in that in a couple of different ways. We have proprietary propulsion technology that factors into smart missile defense. We also have some optical navigation technology that plays, also some radiation-hardened computers that we put on certain smart systems as well. So there's a few different ways that we can integrate into those systems, but we don't know exactly how big the opportunity is quite yet.
Your revenue last year was split between defense and space. Your roots are in commercial space.
Right.
Folks perhaps know you best for Starlab, which is the commercial space station that you're developing in part for NASA when ISS is decommissioned. Lay out the business case for commercial space stations, because just the fact that you're not going to be a publicly traded company and this is a key future business for you, I don't think people fully understand the business opportunities here.
It's enormous. So if you just look at the ISS spend today, it's around $5 billion, maybe a little bit more. That includes NASA, but also other partners like European Space Agency, Japanese Space Agency, and others. So if you just take that cost base and invert it, that becomes the commercial revenue opportunity. And that's just for the base case. So if you look at all the other opportunities you could do in microgravity, biopharma research, for example, space manufacturing, data centers in space, all of that. And you and I have talked in the past about SpaceX. And I remember a conversation where we talked about launch demand. And we said, well, SpaceX is going to launch all the payloads to space in 2 months of the year, and the other 10 months of the year they're going to be time on their hands. And of course, that's not what happened, because it didn't address demand, it created demand. Commercial space station is very similar. When we have a commercial model, there'll be many, many more opportunities to monetize microgravity. And so that's really where we're playing in that part of the field.
Speaking of SpaceX, obviously saw this very public feud between Elon Musk and President Trump last week, and it highlighted just how far along SpaceX is versus other parts of the space industry, whether it's Starlink with the internet connection or the Falcon rockets and their capability to bring astronauts to space, the fact that they have a contract to help deorbit the International Space Station.
Right.
How do you see the space economy and the competitive landscape evolving?
Well, I'm very bullish. I mean, SpaceX is a key player. They have key capabilities, but we have Blue Origin, we have Rocket Lab, we have Firefly, we have other new entrants. And then also in Europe, they're trying to build a launch capability. Japanese and India have a launch capability. So I'm actually very bullish about the future of launch. And then, of course, what that enables is all these great hardware and infrastructure projects, and that's really where we play. So we're not playing in launch, we're playing in the infrastructure layer being built in space.
NASA is your single biggest customer. NASA is being shook up right now. The administrator nomination was pulled. How are you navigating those dynamics at that agency?
Focused on delivering on our commitments. So we've achieved 23 technical milestones on Starlab, our space station program. We're going to continue to execute on that. NASA will figure out, who the new administrator is, but I think it'll be, for the most part, steady as it goes. And if you even look at the president's so-called skinny budget, it was very bullish for commercial LEO destinations, which is the commercial space station effort. So we're feeling very good about that opportunity there. And leadership matters. The NASA administrator will matter. But right now we're just focusing on our customers.
We saw it yesterday with Anduril topping the CNBC disruptor list. We
Maybe a little bit more. That includes NASA, but also other partners.
It does seem that commercial space, and also with publicly traded stocks already, but commercial space and defense tech have moved into the mainstream. How much is policy pushing this forward?
I think policy matters, and certainly sentiment matters. And I think what recognition is happening is that the technology has matured. So the way we like to talk about Voyager is a technology and innovation platform disrupting A&D. And I think leaning into that technology and innovation piece is critical. So I think people now understand that the technology has matured to a level where you can actually have mission critical solutions that work the first time, every time. And because the tech has matured, I think the companies are now ready for prime time.
All right. Dylan Taylor, thank you so much.
Thanks, Morgan.
Voyager Technologies. Sarah?
Very exciting, Morgan, to think about the business opportunities for space, but also more evidence the IPO market is opening. That's Morgan Brennan with the head of Voyager Technologies. Still to come, Elon Musk backtracks in his feud with President Trump, and Tesla stock recovers. What investors need to know and what the street is saying about all of it next. Plus, Treasury Secretary Scott Bessent is testifying before the House Ways and Means Committee this morning. We're going to bring you the headlines as we get them. Squawk on the Street. We'll be right back.
NBC Plus.
Welcome back to Squawk on the Street. Elon Musk walking back some of the sharpest digs in his public feud with the president, writing in a post on X earlier this morning, "I regret some of my posts about President real Donald Trump last week. They went too far." Musk has removed some of the most inflammatory things he posted, including an agreement with someone who said Trump should be impeached, a post saying the president's name appeared in the Jeffrey Epstein files. The Street's happy about the cooling attentions. Dan Ives from Wedbush today writes, "We believe this is an important step to the two becoming friends again and allies on a number of topics." Shares now up 4 days in a row. They have recouped their losses since the spat began last week when the stock guys bottomed around 273. So adding almost $60.
Yeah, I think it remains to be clear whatsoever what the nature of the relationship, if any, will be between the president and Elon Musk. Of course, at the time we remarked on seemed to be certainly ill-advised. Many of the comments that Mr. Musk said taking on the president in the way that he did, given so much at stake for his companies in terms of just how connected they are to the federal government, Sarah.
Yeah.
Whether it be SpaceX, of course, and NASA, or the need for federal autonomous rules, for example, as they start the rollout of their autonomous efforts.
Yeah, and that explains the stock reaction, right? What investors now can focus on robotaxis and Optimus robots and not on how miserable a Trump administration could make life for Musk, whether it's fuel efficiency standards or self-driving regulations or, we've already dealt with the tax credits thing, but there's so many, not just government contracts, but government rules. I did note that President Trump said on a podcast this week that he has no hard feelings toward Musk and that he could see the pair repairing their relationship. So who knows? Maybe there's more. But clearly investors are feeling better about the situation and the fact that, Trump did not pile on too hard after that first threat of government contracts. So that was a, 15% decline last week? $34 billion in the net worth of Mr. Musk coming back.
Yeah, 150 billion market cap. We'll see. We'll see to what degree the president's at least willing to forget, maybe forgive.
Yes.
That's to be determined.
No, it is. And escalation can occur very quickly, of course, as we know as well with both of these gentlemen. All right, let's get a news update now. Silvana now has it for us. Silvana.
Hey, David, good morning to you. A federal appeals court will hear arguments from President Trump's legal team today in a bid to toss out his hush money conviction. The three-judge panel will consider whether to move his case from state to federal court, where the president could then try to have the verdict thrown out on presidential immunity grounds. A jury convicted him last May of falsifying business records of hush money payments to adult actress Stormy Daniels to allegedly cover up an affair. Meanwhile, a government watchdog group in Wisconsin filed a lawsuit today to stop Elon Musk from offering cash payments to voters in the state ever again, calling them a bribe. It comes after he handed out three $1 million checks to voters this spring ahead of its hotly contested Supreme Court race. His super PAC also handed out $100 to voters who signed a petition decrying activist judges. And South Korea says it will give North Korea a break on blasting propaganda across the border. In an effort to ease tensions, Seoul's military shut down loudspeakers today that have been broadcasting anti-North Korea messages. Carl, I'll send it back to you.
So a lot of thanks. Treasury Secretary Besson testifying before House Ways and Means right now. The new details from that hearing in a moment. Plus, Meta reportedly paying $14 billion for this 49% stake in Scale AI. We'll talk about what that means for the AI arms race later on this hour.
happy with it.
Well, the news today, President Trump announcing on Truth Social that there's a deal between the U.S. and China after trade negotiations. We're going to talk this just in with one of the chief negotiators, the Commerce Secretary, Howard Lutnick. First on CNBC, 11 a.m. Eastern Time, we'll get a full readout of what those talks between the U.S. and China were about, what was agreed to, and where we all go from here. Some questions remain, despite the president posting positively, including saying, part of the deal was that they would give us the minerals and we would allow the Chinese students. But there's still some questions, David, including what you brought up, which is the export controls on chips and where we stand there.
Yeah, and obviously any number of other negotiations that continue, whether it be with Japan, South Korea, India, which the market is also interested in.
Yeah, July 9th.
July 9th.
Only a few weeks away.
Yeah, we were talking about it earlier. All right, something else we were talking about earlier is Meta scaling up its AI ambitions, investing $14.3 billion for a 49% stake in Scale AI. That brings the company's co-founder Alexander Wang on board at Meta, and his efforts are going to be to try and pull them ahead in the AI race. Let's bring in Robert Leathern to discuss. He's a former VP of product at both Meta and Google. First, Robert, love to get your take on Meta's decision here. They're not taking control, but they obviously are making a significant acquisition, in quotes, so to speak, here.
Yeah, my understanding is the companies know each other pretty well. I think Meta's been working with Scale AI for quite some time on labeling and other things. Meta actually invested in the company previously, so obviously they believe that the folks over there can really help them accelerate what they're doing in AI after some recent disappointments and some progress that might be lagging some of the competitors.
Yeah, it's interesting in that, they're bringing Wang over, obviously, and they're paying a big premium for 49% of his company. Do you have any sense, I don't know if you know him or are familiar with the work that he's done or what his ambitions will be over there, or where Meta feels as though it has not been perhaps succeeding so far in the AI race?
Yeah, so a couple things. I think Meta really doesn't have the kind of reasoning models that some of the other companies like OpenAI have yet. So clearly that's going to be really important. And those are also very compute intensive. And so there's going to be a real continuing pressure to scale up on the data center side, which we obviously have heard about before. When it comes to that kind of scaling, I think it's going to be important to get help from the U.S. administration, from obviously other nation states. So I think I know Scale AI and their CEO have been very hawkish on China. They've talked about this publicly, that it's really a race between the U.S. and China in many respects for these technologies. And so it might be that Meta also saw that as a potential benefit to working closely together with Alexander Wang and the company and taking this position in the company. That could also be one of the benefits of doing so.
Who's going to be most scared or threatened by this announcement between Meta and Scale AI?
Well, I think certainly Scale AI has other big AI companies as its customers, and so it might be that they're concerned about confidentiality or other things in that respect going forward. It remains to be seen what that'll look like, what that will look like for them. And I think that's going to be OpenAI, Google, etc. But certainly it's a very important player and a very important component in the AI race. Although of course so is the whole data center side of things as well.
Yeah, and finally, speaking of AI, it's only a day or so ago that we heard from Apple, or a couple of days ago. Not much there in terms of additions to their AI strategy. Sort of curious as to your thoughts about where they stand right now.
I think they're in a tough spot. They clearly are lagging behind in many respects. They do have, obviously, the device as a very important component. They made some announcements about giving developers access to on-device LLMs, which I think is something folks have been looking for and I think will be helpful for developers. But clearly, the package of announcements let folks down a little bit, was a little bit disappointing. So I do think they still have a lot of work to do because of their enormous footprint with consumers and the real importance of the device when it comes to how people will access these services. So I think they have a lot to do, and hopefully they'll be doing a lot more in the future.
Yeah, well, we're all waiting. Rob, thank you for your time. Appreciate it.
Thank you.
Coming up, the latest from Treasury Secretary Scott Bessent's hearing on Capitol Hill going on right now. Ahead of a big interview we've got for you at the top of the hour, Commerce Secretary Howard Lutnick joins us live. Plus, CNBC's top states for business rankings just around the corner, how the competitive landscape has transformed and what tariffs have to do with it. That's later on.
por
Treasury Secretary Scott Bessent testifying before the House Ways and Means Committee this hour. Eamon Javers has been listening in, monitoring, and joins us with the headlines. Eamon.
Yeah, David, that's right. You can see that live look in there of the hearing in progress. Treasury Secretary Bessent has been giving a bit of an update on the China negotiations, as well as pitching the president's tax bill, which is the president refers to it as the one big beautiful bill. Treasury Secretary Bessent here calling it OBBB. That's the new nickname for the tax legislation as it moves on Capitol Hill. Treasury Secretary Bessent here saying that the Chinese need to be a reliable partner in these negotiations, and also saying that he's not going to allow China to export its way to prosperity. He also talked about the negotiations in Geneva and the bearing that they have now on the negotiations that are taking place in London. Here's what he said.
If China will course correct by upholding its end of the initial trade agreement we outlined in Geneva, and I believe after our talks in London they will, then the rebalancing of the world's two largest economies is possible.
He referred to it in his written remarks as one big, beautiful rebalancing. So I guess now we have a one big, beautiful bill, one big, beautiful rebalancing. The Treasury Secretary is saying that the administration's policies here are responsible for relatively low inflation and solid recent stock market performance. And he's urging the committee here to move forward with the president's bill and obviously updating them a little bit here on where negotiations are with China, guys. Back over to you.
And what do we know about the agreed upon Geneva deal that they're all pointing to China honoring?
That's what we don't know. I mean, that's the big question here, right? And what was the agreement, if any, in London? I mean, you saw the president's post on social media earlier today in which he said we have a framework for a deal that'll be signed by Xi Jinping and himself, President Trump. What we don't know is what was agreed to there. The president saying in social media that there are agreements related to magnets, agreements related to rare earth material, also agreements related to Chinese students in the United States. But that's kind of all we know publicly about what's been struck in terms of a deal in London. We don't have anything in writing, and we don't have any indication of when anything might be signed between these two countries, or if anything will be signed, or if this is just sort of a handshake agreement to continue on, post Geneva. It's really unclear right now, and I think that's why lawmakers are trying to press Secretary Bessent up on Capitol Hill to get a little bit more detail.
Right. There's clarity on what happened in London. There's still lingering unclarity on where we stand legally binding-wise, Eamon, with the UK, and then who's first in line for another framework, whether that's India or possibly Japan, although they continue to talk tough about autos.
Yeah. Secretary Bessent just said that a number of countries have come to the United States with what he calls unbelievably good offers in terms of trade and suggested that they are going to have more trade deals, but no evidence of sort of who that would be, when that's coming, what those trade deals will consist of, just saying that this is going to be a successful effort here. And going back over 40 years, the Secretary laying out the history of trade in the U.S. and blaming his predecessors as Treasury Secretaries and previous presidents for allowing an unbalanced trade system to develop in the world that hurt American workers, and saying that this administration is determined to fix all that.
Indeed. Well, for now, the market's definitely giving all of this the benefit of the doubt as we grind a little bit higher here. Eamon, we'll talk soon. Eamon Javers in Washington. Yeah. Speaking of all of that, coming up in a few moments, a first on CNBC interview with the Commerce Secretary, Howard Lutnick. We'll talk about the China trade talks as the president says a deal is done and that the relationship with China is excellent. When we come back, CNBC's annual search for America's top state for business is kicking off. Washington policies, tariffs, federal job cuts, all changing the landscape. We'll talk about why this year's list could look a lot different in a moment.
Garden centers.
Less than a month away from the reveal of CNBC's 2025 top state for business. It's our 19th year, and big changes in Washington might have a major impact on this year's rankings. Our Scott Cohn is here to tell us how the list is shaping up and how it's accounting, Scott, for this changing world. Good to see you again.
Yeah, good to see you too. Yeah, there are a few changes out there, aren't there? And you know, when we built this study way back in 2007, we designed it to be able to adapt to change, and this year really puts that design, that principle to the test. So remember how it works. We start with 10 broad categories of competitiveness. Those are the same from year to year, but then we weight them to reflect what matters most, what the states and companies are talking about. This year, they are talking about the economy in these uncertain times, so that carries the most weight, edging out infrastructure, which was the top category last year. We look at things like growth, to be sure, but this year we're also factoring in the potential impacts of tariffs and federal job cuts. That is new this year. Hiring may have slowed, but we still have a worker shortage, so workforce remains important. Cost of doing business moves up as inflation fears persist, even with today's number. And a lot more talk this year about business friendliness. We do still look at quality of life. It carries a little less weight kind of along with workforce as hiring slows. In technology and innovation, we're factoring in the potential impact of federal research cuts, so that's very different from state to state. That's followed by education, access to capital, and the cost of living. We'll be crisscrossing the country in the coming weeks to tell you more about all these issues, and we wind up, as we always do, in this year's top state. You'll be able to see where your state ranks, follow our journey, read all about it, how we do all this, the details of our methodology at topstates.cnbc.com.
You're doing this at a time where it's a pretty raucous debate about the federal government and especially blue states.
Right.
Watching the situation in LA. And then there's the issue of higher education, which of course has always been a huge draw, at least at the city level, right?
Right. That's important, and particularly the research grants. You know, every year in our technology and innovation category, which seems to be picking up more steam, we look at grants. That was one of the ways that we've measured it. Well, now we had to also look at it as a negative and look at what states are doing on their own to fund research and development. So we had to add things like that in there. In that all-important economy category, we had to look at the impact of tariffs and the impact of budget cuts and how that might slow some states. But again, it could also be opportunities for others. One site selection consultant I talked to said busiest time in 30 years.
I just wanted to stop you on the tariffs. So
Yeah.
you're looking at what? States that export more or import more?
States with exposure to international trade, states with more exposure to China. And we have some data that we've had done exclusively for us for this study. We're going to be talking more about this next week. We're going to be at the Port of Oakland, and we'll talk a little bit about the ups and downs of that. Because again, there's some opportunity, clearly. We're going to talk to a CEO who's stepping up his search for a U.S. location, in part because of the tariffs. So there's things like that, but also there is the downside to it. It's really an interesting year that way.
And what about, I guess, immigration or the crackdown? A trained and available workforce has to be an important component as well, right?
Right. Workforce is interestingly not as important as it was in recent years. For a couple of years there, it was the top category and everything was all about people. Well, now we have slowing hiring. So we're still about 1 million jobs short of what we need in this economy. But hiring is slowing. AI is picking up some of the slack as well. So workforce is still very, very important, and it probably always will be just demographically, but not quite as important this year. But the whole immigration crackdown plays into that. It's, for however you feel about it, it does impact the number of available workers.
It's going to be good to see more of you in the coming weeks. I know you're busy.
Yeah.
19 years?
This is, 19 years of this. 2007.
Amazing. Scott, thanks. Talk soon. Scott Cohn. Coming up next hour, a can't-miss interview with the Commerce Secretary, Howard Lutnick, fresh off of those talks in London with China. That conversation is coming up after this break.
Crypto.com is America's premier crypto platform.
and Peacock.
You download.
Welcome to the Halftime Report. I am Frank Holland in for Scott Wapner. Front and center this hour, reaching for new records. The S&P 500 within 2% of an all-time high after cooling inflation data and China trade tensions come off the boil. The investment committee is standing by to break this entire thing down. Here at Post 9, we have Joe Terranova, Shannon Sakosha, Jason Snipe, and Steve Weiss. First, we're going to do a quick check of the markets before we begin the conversation. You can see a bit of a muted day right now. The Dow up 1/3%, the S&P and the NASDAQ up very fractionally right now. And really, that's where we got to start the conversations. Joe, surprised we're not seeing the markets move higher after what we heard from Secretary Lutnick, the announcement that there is a deal when it comes to export controls on tech to China, rare earths to the U.S., and seemingly that would kind of move supply chains on both sides.
That would indicate that it was priced in already. And I think, in fact, the market expectation is, I said a couple of weeks ago, we've become desensitized to all of the tariff negotiations, and I think the market believes ultimately that there will be some form of a reasonable outcome that will comfort markets. I think we learned that well the weekend of May 9th through May 12th when you had the Geneva Convention with the Chinese. So it's steady as it goes. It seems as though it's a very calm environment so far this week. You have the VIX now somewhere around 16. You have the narrative surrounding the broadening out thesis expanding to areas of the market that were further unloved, such as small caps last several days. It appears as though you're seeing some capital go out of momentum into small caps. Overseas markets remain remarkably strong. You have Mexico up 17%, Brazil up 13%, Germany up 20, Spain up 22. You have the Hang Seng up 21, India up 5. So there is this narrative that you can diversify in this market. You're seeing the broadening out. It was reflected earlier in the year in broadening out with sector ownership. And now it looks like we're doing it beyond that geographically and by equity size class. That's a good thing for markets in the near term.
So you believe all the good news is essentially priced into the market. Shannon, I want to come over to you. Wells Fargo out with a note earlier today talking about trade and tariffs. Obviously, before we got this, the conversation that we had with Howard Lutnick saying in part, we believe we've seen the bottom as the feedback loop closed and tariff talk turned constructive. Going forward, we need tangible tariff progress for additional meaningful gains. If we reach the end of June with more promises than progress, expect another bout of volatility. I think the question is, as we sit about 2% from all-time highs, is this progress or is it just what everybody already expected, as Joe said?
No, I think the challenge here is that, we've been in this period of lower volatility, but that really has been as a result of what, frankly, were earnings results that were a little bit stronger than expected. And so now we're entering this difficult period that we have 4 to 5 weeks before we really see any meaningful uptick in terms of earning announcements. And most importantly, that micro data that's going to corroborate or refute the macro narrative that's going to be created over the next 4 weeks or so. So I think the biggest challenge here is that, to Joe's point, I think markets, investors and equity markets are anticipating that these tariffs are going to continue to move lower, and that we're certainly not going to be at the peak, but that we're getting down into the areas where we might end up with mid to high single